Wells Fargo predicts up to 125 rally for these two stocks. Now, even accounting for recent losses, the tech-heavy NASDAQ index is up 28% so far this year, leading the way in an overall bullish market. The surge in the NASDAQ has been fueled by investors gravitating towards tech giants. According to Chris Harvey, head of equity strategy for Wells Fargo, the rally is solid and it will remain so until the Federal Reserve cranks up interest rate enough to kill it. Now, Harvey knows that inflation, while falling, remains persistently above the central bank's 2% target rate, and the Fed will almost certainly have to raise rates again later this year, a move that will likely contract available credit and set off a recession. As Harvey puts it, tech is not going to roll over. The major theme isn't going to roll over until you crack the economy. That's what happened back in 1999. That's likely what's going to happen now. And I don't think you can crack the economy until the Fed gets more aggressive. So we'll have some wiggles. I think we'll have a pullback in the market. We'll have a pullback in big tech. But that overall theme is still in place and not until the economy breaks. This gives investors a window of opportunity. The stock analysts at Wells Fargo are pointing out stocks with solid upside, up to 125 in some cases, and that are looking bullish now. We've used TipRanks database to look up the latest details on two of their picks. Here they are, along with the Wells Fargo's commentaries. The first we have on our list is Bio-Rad Laboratories, Bio for short. Now, I say biotech, and most of us will automatically assume medical research, especially cutting-edge research into new drugs and medical treatment. Bio-Rad Lab, however, occupies a different but equally important niche in the biotech realm. The company is a developer and manufacturer of innovative lab products for the scientific research and clinical diagnostic fields. Bio-Rad has been in business for more than 70 years and has built a reputation for delivering the quality product and research tools that keep the nation's biotech labs on that cutting edge. Now, a look at Bio-Rad's product line tells much of the story. The company offers product in 5 categories, and they are life science, clinical diagnostics, quality controls, food and beverage testing, and classroom educations. A small sampling of the company's product includes a variety of chromatography tools, testing systems for autoimmune diagnosis, diabetes, infectious diseases, and blood tap screening, bar-coded quality control tools, data management solutions, and kits for vet diagnostics and water quality testing. In all, Bio-Rad provides all the instruments, software, consumables, reagents, and content needed for a modern biotech lab. In the recently reported first quarter 2023, Bio-Rad generated a top line of $676.8 million, down 3.3% year over year, and missing the forecast by $12.48 million. The company's EPs in non-GAAP measures came in at $3.34, 14 cents below expectations. Looking at the company's two largest segments, we find that life sciences revenue fell 6.8% year over year, while clinical diagnostics was essentially flat. Together, these two segments accounted for $675.7 million of the total revenues. Now, shares in Bio fell more than 16% after the release of the first quarter numbers, but Wells Fargo analyst Timothy Dallas says this is a chance for investors to buy into a quality stock at a relatively low price. Now, Dallas writes, investors underestimate the company's long-term growth opportunity to enhance their earnings and margins supported by solid business fundamentals and their ability to position themselves opportunistically to benefit from secular growth tailwinds despite near-term sector and macro headwinds that are temporarily in nature. Bio has a compelling portfolio targeting high growth areas in their end markets, i.e. process chromatography, ddPCR, IH500. They continue innovating to support growth and have unique long-term margin expansion opportunities, the analyst added. For Daly, this adds up to an overweight, say buy rating, and his $550 price target implies that a one-year gain of approximately 51% is waiting for Bio shares. Daly is hardly the only analyst to take a long-term bullish view of Bio-Rad. The company stocks has picked up 4 recent analyst reviews, all positive, and gets a strong buy from the analyst consensus. The shares are currently trading for $365.80 and $540.25 average price target suggests a potential one-year appreciation of approximately 48%. Now, next up is a biopharmaceutical company, MorphoSys AG. Now, this firm based in Munich, Germany operates in the U.S. through its Boston-based wholly owned subsidiary, MorphoSys US Incorporation. The company is focused on the development of new treatment for cancer, especially cancers that have proven resistant to current drug therapies. Now, MorphoSys is operating at both the clinical and commercial stages, making this biopharma a double barrel opportunity for investors. The company boasts FDA approval of its drugs, tafasitamab, specifically for treating relapsed or refractory diffuse large B-cell lymphoma, marketed under the brand name Monjuvi. Now, Monjuvi is also currently being evaluated in various clinical trials for its effectiveness against other types of cancers. Additionally, MorphoSys is actively developing pelabresib, a targeted BET inhibitor, as a treatment for myelofibrosis. A look at the clinical pipeline shows two important catalysts on the near horizon. Now, the company has completed enrollment in 2 phase 3 studies, the MANIFEST-2 trial of pelabresib in the treatment of myelofibrosis and the frontline study of tafasitamab Monjuvi in the treatment of the first-line diffuse large B-cell lymphoma. Data releases for these studies are expected in the fourth quarter of 2023 and first half of 2024 respectively. Analyst Derek Aquila, in his write-up of MorphoSys for Wells Fargo, sees high potential. He is particularly bullish on pelabresib, writing, "Once in a while you can find deep value in SMID biotech, and we like MOR for this reason." With a de-risk PH3 readout for pelabresib in fourth quarter 2023 and approximately $1 billion in peak sales potential, this is a compelling story to us. Looking ahead, docs are interested in pairing pela with other JAKs such as pancreatinib and momelotinib, particularly if pela demonstrates disease mood. Now, this is what we think is underappreciated by the street. Aquila is less enamored of Monjuvi, but points out that the company's existing commercialization of structure for that drug sets it up nicely to introduce pelabresib to the US market. He describes the current valuation of the stock as an attractive entry point. At the bottom line, Aquila gives MOR shares an overweight buy rating with a $17 price target that predicts a robust 125% one-year upside potential. Overall, this stock has a moderate buy consensus rating from Wall Street based on the 4 analyst reviews that include 3 buys and 1 sell. The shares are currently priced at $7.50, and their $11.38 average price target suggests a 12-month upside of approximately 52% from that level.